What's up, everybody? I am Jaspreet Singh, and welcome to the Minority Mindset. And today we have Ryan Scribner. He started saving up just $1,000 a month when he was working a job, and he started investing that money through things that he learned. And now he's quit his job. He's a full-time YouTuber, and he talks about investing. So, Ryan, thank you for coming in.
Thank you so much for having me. I've been a huge fan of your channel for a long time, and I got to say, you're one of the people that inspired my channel, seeing an awesome guy making YouTube videos, and
Oh
it really
man.
was just something I said, is this possible? Can I really do this? And I figured I'd give it a shot. And I never thought that this would turn into my full-time gig, but I'm very happy doing that. I get to do something I love every day, and I get to help people, be more financially responsible, especially young people. There's not a lot of good financial education out there, especially in the
Oh
school
yeah.
system.
hmm
So that's kind of what I aim to do with my channel, is kind of fill that gap there with what was left out in high school and what you kind of need to know in the real world. So I share a lot of investing and financial related content on my channel. And specifically today, you want to talk about what you should know before you start investing?
Yeah. Well,
Okay.
first off, that's an honor, man. That those words, they mean a lot to me, so I appreciate it. I'm glad that what we've done has resonated. But yes, today we wanted to talk about how people can start investing. It's a common thing people talk about: investing, but making the first step is not always easy. So, what advice do you have for someone to start investing right now?
So the number one thing I will say is I know it's fun and it's exciting to start something new, especially with investing. And there's a
hmm
lot of resources out there you can choose from. If you go to any bookstore, you go to the finance section, you'll find probably 100 different books on all kinds of different strategies: short-term investing, day trading, long-term investing, value investing, options, futures. And you can get super overwhelmed by the amount of information out there. But the number one thing I would recommend, I know you're excited, I know you want to get started immediately, and you think your first step is going to be to go open up a brokerage, but the first step is really to figure out what your strategy is going to be and learn that strategy, learn it in and out, and understand what it is. And the main piece of advice I've given people recently is make sure you have realistic expectations for the market, because as of recently, what we've been seeing with the market hasn't been realistic or typical of what we've seen in previous years. The market generally goes up and comes back down. We see corrections taking place. And 2017, at least, was full steam ahead. That is
hmm
not typical of what we see from the market. So don't think past results are going to guarantee a future outcome, especially with what we have seen. So have realistic expectations with what kind of return you're going to see from the market.
Yeah, one of the things that we always say is just because something has gone up 1,000% or 2,000% doesn't always mean that it will continue going up in the future.
Oh, absolutely.
So I think that's a really good point. Where can people start learning about this?
Well, I would say the first place I would start is your library. So maybe if you were in high school, I'm sure your library should have some financial books. I figure, why even spend any money? You don't even buy the books if you don't have to. Check out the library, check your local library. But then the first place I would start is books. I know a lot of people are not into reading anymore. It seems like it's a dying art, among young people especially. But if reading is not your thing, then I do have my YouTube channel. There's tons of people on YouTube now doing financial related videos, investing related videos. So I would start either with reading some books, or I would go to YouTube and see what you can find out there for free. I always start learning for free, and then I build upon that. So that would be the first place I would start, is looking at what you can find for free resources.
What's your investing strategy? How do you typically gauge your investments?
Yeah, so what I do, I mean, my strategy when I started investing, and really I wasn't investing, I was doing a form of speculation without
hmm
knowing it. But when I first started, and it seems like this is what everyone does, you're interested in the allure of short-term trading. So I started with short-term trading. That's the strategy I learned first. And I was doing it, and I found that 50% of the time I was right, 50% of the time I was wrong.
Yeah.
So I was just breaking even pretty much. And I'm like, this doesn't seem like a strategy where you're trying to be right 50% of the time doesn't seem like a good strategy to me.
hmm
And so that is when I started learning more about Warren Buffett, a very, very successful, probably the most successful investor of our time. I started studying his strategy. and learning about long-term value investing. I learned about the book The Intelligent Investor by Benjamin Graham. I read through that. And finally, I was like, oh, this is a logical investing strategy. So
Mm-hmm.
now my strategy, I did a small amount of swing trading because it's, I mean, if you have a good stock and you learn the personality of that stock, you can be successful swing trading. But for most people, value investing, long-term value investing is what makes the most sense. And so that's the majority of my strategy is long-term investing.
I agree with that. It's funny because when I was in high school or just finishing high school, a lot of people I knew were about trading and making all this money with penny stocks and doing this trading. And I was like, okay, well, I'll try it out. I had already made a good amount of money in the stock market because that was right after like the '08 crash. So things just like
Okay.
no matter what you bought, it went up.
It was going up. Yeah.
So I was like, oh, I'm a genius investor.
Yeah,
So
you get that false
oh
confidence from
yeah,
that.
yeah.
Yeah.
So I took that money and I started doing this penny trading and penny stock trading and like short term trading. And I remember I was waking up every morning like an hour or two before the market opened and trying to research all these penny stocks, reading all these articles. And I was like sitting there doing trades every single day. And I think I did that for a summer. And I think by the end of the summer, I ended up losing like 20% of my
Wow.
portfolio or breaking even. But it was like, I don't know. I was not very good at it, and that's kind of very similar. I started learning about long term,
Yep.
thinking long term, and understanding a company's value as opposed to just what can I do today. So that I think I really like that long term value and learning. What's the second
Right.
point that you would recommend?
The second point would be don't chase a stock. A lot of people will find a stock that they love. Maybe it's some kind of hot tech stock or a company that everyone is just in love with right now, and they want to get in, they want to get a bite of that stock, but the price just keeps going up and up and up and up. It's never a good idea to buy things at the top of the market or invest in stocks at all-time highs. The number one piece of advice, this is straight out of the mouth of Warren Buffett, is the whole buy low and sell high. And people really forget this big piece of advice because it's kind of, they think it's common sense. It's like, of course, you buy low, you sell high. But what they don't realize is that when they're buying stocks that are just soaring, they're buying at all time highs. They're buying high. And so it's kind of the exact opposite of what you should be doing. You need to wait for there to be a correction, at least some kind of correction. Don't be buying stocks as they're, soaring. You want to buy low and then sell them higher. And so I would recommend if you're in love with a stock and it's at all-time highs, keep it on your watch list. Wait for a correction to enter it and then have a long-term position started at that point. A lot of people get excited and they see things going up and up and up, whether it was the cryptos or whatever it was. They see these assets trading at crazy levels and, they haven't really educated themselves on what bubbles are. And next thing you know, you're buying something way up here. And quickly that mindset changes from, oh, I want to make a ton of money to, I just want my money back. I just want to break even on this thing. And that's when the shift happens there. But by buying low, at that point, at least there is some wiggle room there where that stock has traveled or that asset has traveled higher previously.
Yeah, I think Warren Buffett actually has a quote on that. He says, the stock market is a device for transferring money from the impatient to the patient.
Yes,
So
that's very true.
how is somebody supposed to know that now is the time to buy? So they see a stock coming down. How do they know that they should buy instead of run because it's never going to stop going down? How does somebody know that now is the time to buy and now is not the time to buy?
Well, that's a tough one because you really can't time the market. It's impossible to time the market with any sustainable accuracy. And as a result, a lot of people will get in and get out of the market at the wrong times and end up, having poor performance that way. And I understand the fear there of trying to catch a falling knife where you think you've got it and then it keeps going down, it keeps going down. The number one piece of advice I would give you is to follow a strategy called averaging down rather than, like, let's say you want to have $10,000 invested in the stock and now it's falling and you see that it's low. Don't dump $10,000 in at once. What I would do is I would gradually accumulate shares, maybe buy it every 5% that it falls. That way you're averaging down, lowering that average price paid per share. But again, you might end up in a situation where you drop 20% of your money in or something, and then it goes right back up, and you say, I wish I'd put it all in there. But even a small return is better than, dumping it all in there and then seeing it continue to fall. So I wouldn't really try to time the market. There's no real way to do that. I would just follow a strategy like averaging down, Or if you do buy something low and it travels lower, then understand it's a long-term investment. And one thing you can do to kind of hedge against that risk would be to invest in blue chip stocks that pay dividends, because then even if you do lose money in that asset as far as the market value, you can get money back out of it from those quarterly dividends. And so that's kind of a way to offset some of that risk. That's another recommendation there as far as buying low. I would start with some, blue chips that pay dividends.
Okay, so now we have learn, don't chase a stock. What's the third tip that you have?
The third one, and this is one that a lot of people fail to follow because, again, it comes from that excitement, is invest in things you understand. A lot of people follow, like, biotech companies or very complicated businesses. I mean, let's look at Tesla for an example. Really, really cool company, but does anyone understand what's going on there with Tesla? Obviously, there's
Well,
huge
they're sending things
opportunities.
to the moon. I understand
Well,
that
they're
much.
sending things, yeah, they're sending cars to the moon, so that's pretty cool, but do we understand that as an investor? I certainly don't understand what's going on within Tesla. So compare a company like Tesla to one of my favorite stocks for beginners, Waste Management. Waste Management, very simple business to understand. People generate trash. It's got to go somewhere in a responsible way. That's what Waste Management does. They take our trash, they dispose of it, and they have commercial, residential, industrial customers. That's a simple business to understand. Compare something like Waste Management to Tesla, and you can see how one is a simple business, one is a complicated business. Now, if you are a tech genius and you're following Elon Musk and you understand everything he's doing, then Tesla might be a good investment for you. But it just comes down to understanding what it is you invest in. The way that I test this myself, and this is something a friend of mine had taught me too, which is cool, but I call this the elevator pitch. So if you're going to invest in a particular stock, test this out with your friend or your brother or your family members. Give them a 30-second pitch on that company. Can you explain it to them in 30 seconds? If you can't, then you don't understand that business. You should be able to do a quick elevator pitch and explain pretty much in a nutshell what that company is doing and explain that business. And if you can't do that, then I don't think you really understand that business. And the issue with that is if that stock starts going in the wrong direction, you're not going to even know what to be looking for as far as signs of improvement with that company.
So,
So
a
I
quick
say
question.
keep it simple as the number one.
If someone is interested in a stock like, let's say, Waste Management or Tesla, how
Sure.
can they go and learn more about the company? Because we're not always exposed to every company out there, but there's a lot of opportunities. How can a new investor go out and learn more about a company that they might be interested in?
Yeah, that's a very good question. And again, this comes down to one of the problems is we're drowning in information. You can research any stock. There's thousands of stocks. There's over 6,000 in the US alone on the major exchanges. So it comes down to narrowing down and spending time researching investments. And I would much rather see somebody spend a couple of days or a week researching a stock and deciding against it than make a quick decision and getting into something they don't understand. But really, it comes down to reading. A good place to start is looking at like the vision documents, or like every year they've released like the company vision, what's going on within that company. That can all be found within like investor relations. Reading up on quarterly earnings reports, they have good summaries in there as far as what the company's working on. But I always study things like whether or not that company has a moat, and that would be things like high barriers to entry, patents, what's protecting them, what stops me from starting that business myself, things like that. It really just comes down to reading pretty much whatever you can get your hands on. I wouldn't just rely on the company produced documents because they can oftentimes put a creative spin on bad news. So I would look at bullish and bearish perspectives on the stock, and just spend a lot of time researching these investments. You can do it all online, pretty much with free information, but don't fall into information overload or try to be studying too many stocks at once. You want to have a small basket of stocks that you're studying, and a lot of people also make the mistake of investing in too many companies at once, and it's too much to keep track of. I say it's like having too many chickens running all over the place, too much to keep track of. If all of a sudden you're like, oh, they reported earnings, I had no idea, then you are investing in too many stocks. You want to, narrow down your portfolio and lean it out and just have a couple of companies you can really stay on top of.
That's funny. I just want to touch on one part. You said that companies can kind of enhance or creatively say things on their company reports. I was actually on
Yes.
a earnings call for a company that they're like a lender for subprime auto loans. And as you've seen recently, subprime auto loans delinquency rates have been going up. And somebody brought a question on, so they were like, So how do you think this increase of subprime delinquencies, which is exactly what this company is lending, how is that going to affect your company? And their whole thing was, oh, it's actually good for our company. The delinquency rates are going up because I forgot the justification, but they were like, it puts pressure on other companies and it eliminates competition. And I'm just like, okay, that's
Yeah,
interesting. So, but yeah.
think about that logically. It doesn't make any sense. But if somebody says it with enough assertiveness, or it's written in a creative way, they can really be the masters of illusion there. But yeah, that's why I would recommend not solely looking at those company produced documents. But that's a perfect example right there.
Well, thank you for coming in, Ryan. We're going to have another longer interview with Ryan, and he's going to talk about where you can make your first investment and how you can do it. And if you want to watch that, you can check it out on the Minority Mindset publication, www.theminoritymindset.com. Ryan, thank you for coming in. Where can people learn more about you?
Yeah, so my biggest following is on YouTube. That's where I do most of my work there, is posting videos on my YouTube channel. I have also a free course that you can take. Links for that are also on my YouTube channel. I have a paid course that's a 12-hour course on how to invest in the stock market. That pretty much covers everything I've learned over the last couple of years. And then if you want to get a hold of me, the best way would be to send me a Snapchat message, and I'm sure we can link that up in the description, or you can find that over on my channel. But it's just Ryan O. Scribner if you want to search that up.
Perfect. Ryan, thank you for coming in, and be sure to subscribe to the Minority Mindset YouTube channel because we release new videos on entrepreneurship, business, and money every single week. And as always, keep hustling.